Okay, thank you so much. Next, we are going to have introduction, and we are going to start off with our guests. We have Mr. Joseph and then Mr. Zava, but we are going to begin with Mr. Joseph. He's an expert concerning with money, financials in the coffee sector. So Joel, I would request you could please share a presentation. It's not too big, but just a highlight for us to get basically what we really need concerning this topic. Thank you, Mr. Joseph. The floor over to you.
Yes, thank you. Good afternoon for Uganda. Say good morning for German, maybe. Yeah, I'm Joseph Anthony Musuuza, finance expert. I work as head of finance at Uganda Entrepreneurs Association, but also a passionate farmer by birth who has worked in the coffee sector right from the garden to the export level with a company that was exporting coffee, but also has a hand in the direction of financing, worked with within an environment of a banking sector before. And I think our goals today will give us a highlight on ways of how we can sustainably empower the coffee farming and the value chain and see how we can economically benefit from it as an investment. I think I give the floor to my colleague who's going to present from Germany to introduce before I dive into the presentation for the day, if that is the program.
Thank you, Joseph. Yeah, my name is Zaver. I'm the co-founder of Cooperative. We are an German African social business. I founded the company together with Alan Mubiru. From the name, you can already hear that he's also a fellow Ugandan of you. So, and we started this company together in order to empower smallholder farmers and to bring coffee, which is produced from the beans to the final product by farmers to the German market. And we're getting now close to our 10th anniversary doing this. And the flagship coffee we are selling is Angelique's Finest, which is a coffee which is owned by the farmers from Rwanda and Uganda, and which also own the trademark and who market the coffee themselves. And we are the extended arm of the coffee cooperative in Germany for selling the coffee, to bring in market access and also pre-finance. And today I will give you a bit update on how the system works, but then focus on how we kind of tackling the pre-finance issue. Thank you.
Yes, so today we're looking at money matters as far as financing sustainable agribusiness in the coffee value chain, and my presentation will be so brief. This was just an introduction of the topic. And my focus was here to show the Uganda coffee value chain, where we have the farmers group, the exporters, the hulling and the grading. In the coffee sector, we have a lot of players, and I think, especially in Uganda, the most affected by the bad management of coffee are the farmers and the final consumers of the product. Yet the middlemen play a significant role in either sustaining the quality of coffee bean or killing the quality that has made our prices keep changing here and there based on what we produce. So here we have middlemen, we have the farmer group, we have the exporters, and it was clearly showing the role played by each person. Our learning objective in the session is to understand what money is and its key functions, appreciate why money and financing are central, and maybe examine the performance and opportunities of Uganda's coffee value chain, and identify key financing challenges in agriculture, because financing has been an issue, especially people with a lot of ideas, with failing entrepreneurships. So my presentation started by defining money, looking at it as a medium of exchange or a unit of account or a store of value. And we know its function is it enables trade, it measures value and stores wealth and supports future payments. and future payments. Here, we're looking at modes of financing where our obligation is to meet the financial obligations at a future date. I looked at why money matters in business. Money is key in providing capital for investment and innovation. It enables financial planning and accountability. Every planning needs to have resources available. Businesses have resilience against shocks if they have that financial muscle. There's sustainable growth through smart resource use, and also allows pursuit of social and environmental goals. So it is not just for profit, but it's a tool of sustainability. And I think for many young entrepreneurs, this is where we need to put an eye. When we have money and make investment decisions, are we looking at profit or we look at sustainability? Most cases, profit makes us not stay for long, and businesses close in after a short time because of the shocks that they meet while they try to stand and exit. A glance at the coffee sector, we know in Uganda we have Robusta, which contributes 20 to 30% of the export earning. It employs over 1.7 million. And now we are producing over 6 million 60-kilogram bags annually that we export. The segments is production, processing, market or export, value addition, and the support services. When you look at the sector performance and trends, I'm just going to run through this before we go specifically to the money. The sector performance is increased export volumes because of the emphasis by all players, including government, to see that we increase our productivity. There's rise of youth and women-led enterprises engaged in coffee. There's growth in local processing and branding. Now investors are coming to Uganda to see that value addition is done here. And then there is also a move for sustainability certification to ensure that what we produce is acceptable internationally on the international markets. Challenges we still face include climate threats. Productivity is still low compared to the potential. There is still limited value addition. Most people focus on production at the garden level, and they have little understanding of what happens post harvest. There's price volatility here and there, and then there's little knowledge of sector players about the product standards. Many of the farmers have little input in understanding what happens at international market and what is required beyond just a garden. Financing challenges that we faced, especially in agriculture, is the high risk perception. Most financial institutions take a slow approach in financing agriculture. There is a collateral. It's because of the high risk exposure that has been assessed with agriculture that requires collateral, which most people don't have. There is high interest rate and the short-term loan tenors. This is because of the of the outcomes from the agriculture engagement, financial literacy, and poor record keeping by farmers or by most of the sector players, especially in the coffee. People take little effort to have an understanding of financials and the financial decisions they make. And the many also don't keep literally books of accounts regarding their investments, their operating expenses, and what they harvest at the end of the day. Then we also have weak coordination in the value chain financing. People tend to work isolatively, which has given a leeway to the middlemen who take advantage of low knowledge by the farmers regarding what happens in the international markets. And since we are not coordinated and we are fragmented, it has brought a big financing challenge, especially for financial institutions to take up financing of agriculture sector. And the result here is the low investment implies low returns. And when we look at financial literacy per se, which is very core in our investment decisions we make, we realize that a farmer who has knowledge of financials will have book records. Will keep good records. Will be able to formulate budgets. Will understand the credit terms before they go to the bank. I think people have gone to the banks. In most cases, you can agree that people walk into the bank and tend to assume to have zero knowledge regarding the credit terms. they follow whatever the bank person tells them. And most cases, we do cry afterwards when we complain of high interest rates and ununderstood charges by these banks, and we end up even defaulting or failing to meet our financial obligations. We don't have clear cash flows. Decisions we make, especially regarding investments, are not informed. Very few people have clear business plans. And also we have an issue that is personal to people about credit worthiness. So financial literacy helps you also build the credit worthiness, and the knowledge now turns money into sustainable growth if we have the other empowerment as a result of knowledge. And how we support youth in agriculture, especially focusing on coffee. There is access to finance. Youth, we need to have advocacy from government sectors, but also from private sector, to see that we have youth-friendly credit and saving models. We must ensure that we employ digital financing platforms to reduce the costs of running business, but also have a way we need to brand financing and grants. Because of the isolative way of operating, people identify, look for financing opportunities isolatively, and we lose out on the voice of working as a group or as an association, as a cooperative that benefits people playing in this very sector. Then youth need to be supported in capacity building and mentorship for them to understand from the idea generation, how do you grow the idea into a viable business plan, and how do you turn a business plan into a tangible establishment of an investment or a business. And I think most youth fail at that point. There's excitement at idea generation, and there is high failure at the time of implementing the idea, nurturing it into a tangible business. And then we lack the mentorship from successful agripreneurs, people who have successfully been into the sectors. Here in Uganda, we have people we call motivational speakers. But the motivation speeches sometimes talk of the good, and they don't speak of the journey from the challenges met at the start to how someone has successfully gone through where they are. We usually talk of motivations at the peak of recording success, and most people who try to get inspired in most cases fail to successfully establish sustainable business enterprises. Then there's little touch on value addition and innovation, looking at roasting, branding, and tourism and technology and marketing. Here is a knowledge gap in terms of value addition, especially in Uganda. Like I said earlier, people in the gardens focus on production of coffee with little knowledge of what is required in the international markets, which has led to a very big gap between what the market expects and is willing to offer and what is actually produced by the farmers, which has brought the price volatility and keep changing prices. And then we also have application of climate smart coffee farming. I think people here are driven by money. They want short terms that maximize output, which at the end of the day actually don't indicate stability. That's why you realize you have a huge harvest in one season and then literally have no harvest in the following season, simply because of our nature of farming, where we're not climate friendly, but we are looking at maximizing profit. I thought it was going to be interactive, where we have group discussions and people say the money-related challenges they have faced while farming, and how youth can overcome financial barriers. And maybe later in the interaction, these are some of the questions that we shall look at. And what role technology plays in enabling access to finance and also enabling markets. From the takeaway from IC, we had money is an enabler for sustainable agribusiness. Coffee sector has huge potential, but it needs smart financing. And if youth agree that the future of the coffee is the discipline and innovation, if one wants to engage into coffee sustainably and we see the sector grow, there's need to have discipline, financial discipline, operational discipline, but also we need to blend in the innovation to ensure that we maximize value, but also we maximize output in consideration of what is expected on the market. And then we also need to have collaborations to build inclusive prosperity. Farmers need they need to understand what the consumers need or expect at the market, because the willingness of the consumers sometimes defines how much they are willing to pay. Farmers need to work with established value additional enterprises so that what is produced is actually what can give us the product that is sellable on the international market. Common mistakes we usually make as youth in businesses. Many entrepreneurs in Uganda struggle, not because they lack ideas, but because we have avoidable mistakes in managing our enterprises. One, we don't agree our capacity in terms of managing an enterprise. People believe once you have an idea and you begin a small coffee shop, it should be managed by you. And we have little to add on knowledge to ensure that we better. We have a lot of copy and paste, and we also have unnecessary competition that is not healthy for business sustainability. But also, when we understand such challenges that youth fail, and building resilience and long-term success, I think it's one of the approaches that we need to undertake to see that the youth who are willing to engage in agriculture, in the coffee sector in specific, are helped to ensure that there is sustainability, there is long-term see of where we are going, but also have operational efficiency and have personal financial discipline. The poor financial management that we usually face as entrepreneurs in Uganda, we mix personal and the business money. And I think this is common. Once you begin a business, you become the business. We've seen where entrepreneurships die when the owner dies. And there's no clear distinction between the natural person who is the owner of the business, and the artificial person, which is the business. In most cases, the owner makes decisions as he wishes since he's the owner, including financial mistakes. So once you don't separate the business money from your personal money, you end up eating your business not knowing. Then we have issues of budgeting. People fear to budget because they feel budgets are restrictive. But from the financial aspect, we know that budgets are a control tool that guides the decisions you make. And people fear to make records because it justifies the unnecessary expenses they make at the expense of their business for their own personal benefit. There is also excitement of profit. Once you make the first business deal and you feel there's a profit, people don't plow back this profit into the business. The excitement now goes into how can you live like a rich man? Someone starts a business and within a year, the business has issues of buying you a car, buying you land, buying you a house, helping you marry a wife. And all these expenses are a burden of the business to fulfill your personal desires and wishes. And I think these are some of the poor financial management decisions we make. And then we've had engagements, including government, where they have access to finance or opportunities. Unfortunately, the marketing of access to finance by financial institutions and also by government bring excitement. People borrow because there's an opportunity. People don't borrow because there is a need. They end up over borrowing because these financial institutions have targets. They will encourage you to borrow as long as you're worth a given amount or you qualify for a given amount. And the question we don't usually ask ourselves is, how much do I need and for what do I need this money? Two, what is the obligation I have in meeting my financial obligations? Is it in my means? And what impact will it have on my business? So if someone borrows money and in paying back the loan installments, you are actually paying from the capital you borrowed. So when you pick from the capital you borrowed and pay back at a cost, it means the money is not enabling you make more money to be able to meet your financial obligation. Instead, you are taking back the money that was given without using it. And the cost of borrowing stays. So at the end of the day, you will default because the money will not be enough to meet your financial obligations at the same time sustain the business. So once we have clear separation of accounts, it enables us to understand how we are performing financially. We need to have simple books that show us how much we've spent, how much has come in, whether the decisions we've made or the approaches are profitable, whether we need to reinvest, and any other business decisions we need to make to ensure that there is sustainability, but there's also growth of the business without compromising on our financial obligations. When we look at lack of business planning and patience, this is a key dilemma that has been seen, especially with the Ugandan youth. We dream to be rich before we work to be rich, and we don't, in most cases, think of the journey to being rich. We don't have that patience to enable the business grow. The day you start the business, tomorrow you begin surviving on the business. And at the end of the day, the question is, are you eating what the business has made, or you are eating the business itself? Because of the poor planning and lack of patience, people begin eating their businesses. They rarely see how much the business has performed versus how much they need to spend, both for sustaining the business in terms of the taxes, the operating expenses that you incur, but also in terms of you as a person. So we usually ask ourselves, at what stage does the business begin feeding you as an owner? Or at what stage do you begin earning from your business? Most youth begin earning from the business before they even make their first sale. When you look at the expenses they make at the start of the business, almost 40 to 50% are meeting their personal needs. So the poor planning and the lack of patience makes this business fail even before it celebrates a year. Then we ignore research. People who want to engage in business because it is a copy-paste style have issues related to research. People don't make market feasibility studies. They don't benchmark. They just start because a neighbor has started, because a friend has said, or because they have read about an opportunity and they think it works like that. So the expectation of the quick return in the long run fails the sector. And that's why in most cases you realize people have started businesses have failed. Coffee innovation schemes have failed simply because we have very poor business planning and we don't have the patience. So here we usually encourage the youth to have to begin with a simple business plan. The day you get the idea, I remember when I was still studying entrepreneurship, from the day you have the idea, generating the idea in your mind, you begin writing anything you think about. And at some point is when you sit and now begin rearranging all the concepts that you have thought of to come up with a business plan. A clearly well-articulated business plan can never fail if you go. And actually, when you go to a financial institution with a clear business plan, with the clear projections, I think many financial institutions would be willing to fund such a viable business plan. But how many do write business plans to get loans? How many have clear cash flow projections? You will realize they are less than 30%. Many of them are excited, and the banks sometimes take them because you have collateral and they want to meet their monthly targets, because remember, this is their job. So the gap in between the expectations of you, the borrower, who is borrowing the money to invest, and the financial institution that is giving the money usually leads to you failing, and the bank, in their risk mitigation, they will take your property. They will recover their money. Then it will be you who will become poorer and poorer. It will be you who will lose. And it will be the business that has actually suffered and failed. The weak marketing and poor record keeping as an issue that we face. People have failed to appreciate the innovation, the digital marketing. When you come to the social media platforms in Uganda, 80% of what is there is not marketing a skill, not marketing a product, but people talking of their social life. Yet the belief is the essence of development of such social platforms is to find how best we can market the products, the skill, the business propositions we have to enable them reach at a bigger geographical scope, but at a minimal pay or minimal cost. Since social media requires just you to have data and you market what you have, and you don't have restrictions on who can view because social media it has a wider coverage. So do people market well? No. We don't have brand identity. We don't have, most of them don't have digital presence. We have weak customer engagements and services. We assume that people need us. Yet in your sense, once you're starting a business, you have a target customer focus group, and the assumption is they must understand what you're offering. It must be speaking to their need, and you need them because your business can only be sustainable if you have those customers. We talked about documentation. We engage in a non-contractual uh, arrangements. We have verbals, we don't receipt, and also we have tax compliance issues, especially in Uganda. People find ways of avoiding tax, and once caught, they end up meeting a huge financial burden, which affects their businesses, some of them even closing. So because of poor records, we end up paying high tax. The URA will come and make estimations, and so because you don't have clear records. And you realize that social media, if used professionally, can grow your business. If you have records, you can understand your financial obligations, including your tax obligations. And when you formalize your business, then you have clear identity. People can always identify you if they have a feel that what you have speaks to their need. Obviously, we have inadequate skills. A teacher used to tell us that entrepreneurs are born, they are not made. But I think over time, we believe that an entrepreneur born needs to be nurtured for the business to be sustainable. Most people, once they start businesses, they think studying was a punishment. They don't equip themselves with enough skills. We don't network, and our adaptability potential are minimal. Most people have little technical and financial knowledge, yet they don't want to upskill or upgrade their level of understanding. So they end up conflicting within themselves. The owner and the business are conflicting on the financial decisions you make, simply because you either have little technical knowledge and you're not willing to have technical experts to take and guide you through because you feel they're taking away your business. So such internal conflicts within you as the owner of the business may lead to the business failure. Then the working in isolation. We have this unhealthy competition of you think once you share knowledge with the people in the same sector, they're going to take your customers. Yet the customer base we have is too huge for us to satisfy it. Most businesses are small, they work in isolations, and they miss out also on the benefit on the economies of working together in terms of sharing the risk exposures, in terms of negotiations with the financial institutions. Having been from the banking background, I know the bank is willing to give a group because of the shared risk exposure than an individual. But people don't want even a neighbor to know when you have a financial need. So we work in isolation. The businesses grow to the best of our mind capacity. It means where your brain stops is where the business stops. We don't allow the inflow of new ideas and innovations from other people because we are fighting to be the owners, and we assume that being the owners, we can manage. And that's where once your business acumen begins deteriorating, the business begins to fail. I worked with Newman. They have a company here that exports coffee. And one of the things I appreciated is at that time we were with the fourth generation, I think, from the person who started, and has been going over from the father to a son, from the father to a son. And I was, by that time, there was the fourth generation. But you realize that while there's been those generative management issues, they had technical persons in marketing, the director in marketing, the director in financing, and they were leveraging on their technicality to see that Newman has been in existence for over years in various countries, both in Africa and South America. The coordination between the German head office and their marketing office in Switzerland. We leverage on technicality to see that the business grows and don't fight to be the best in terms of knowledge to the businesses we've established. So we have to seek mentorship as youth. We have to continuously learn, but also we have to be flexible to market changes if we are supposed to build sustainable business enterprises. So from the youth entrepreneurs, the takeaway is we don't fail because we don't have ideas or the ideas are bad, but we fail because we badly manage the businesses, especially on the side of idea generation and growth. My screen is seen.
It is.
It is, eh? Okay. So we're talking about the takeaways where we need to seek mentorship and financial literacy as youth if we are to engage into sustainable enterprising. We need to appreciate networking and collaborations, especially in the value chain. We need to have a link between the farmer and the person who produces the consumer product to eliminate the middlemen, because the more the middlemen, the more quality is compromised. And then we must have that personal discipline and consistency in what we do. We talked about cooperatives and associations, and one of the things we had highlighted that is faced with the cooperatives is weak governance and leadership. People do substitute benefits of a cooperative with their personal desires and wishes, and there has been a mismanagement in many of the associations. Most of them have failed even to live for a period of 2 years before people complain and people pull out. There are weak internal controls and there's poor governance. Most of the associations are not registered, so the leadership is also not clear. The people who have generated the idea of forming the association sometimes cling to be the leaders with disregard of testing their potential and ability to lead an association. We have limited financial capacity. Cooperatives have low capitalization. In most cases, these associations that are formed have almost the same desires. They are horizontal in nature, not vertical. And they are restricted to the mindset and wishes of the people who initiated the idea of forming the association. And we have difficulties in access. Buy bundles for me. Sorry. So we are saying difficulties in accessing credit from financial institutions due to informal or weak financial records. We know though associations have been formed, still bookkeeping is not only an individual weakness, but also association weakness because people are not compliant and their engagements are not brought right. They don't want to be held accountable, and that has been the biggest problem people have faced. So the only can be sustainable.
Okay, can you hear me and see my screen?
Yes.
Okay. So I found Joseph's presentation very interesting because it's a lot of the challenges he mentioned actually we faced during the startup phase as well. And what I'm going to present to you is kind of a little bit a way of solving a lot of those issues. But for this particular example, so I just want to make you aware that it's always difficult to copy or something. So this just take what we did as an example, and I would say it's an invitation for you to be creative and to be to think out of the box. It's not necessarily that you can say, well, let's just copy the system and it's going to work, because everything always has to come into place. But when we started this, there was no match, like no playbook written out where we exactly had this in mind, how it is at the moment. So sometimes it's also about the flow and especially the partnerships you have, and then what can you develop out of it. So what did we do? So we have a strong partnership between between our German company, Kaffeekooperative, and Rashosco. Rashosco is a business in Rwanda which is owned by 6 cooperatives. And here on the left, you see Angelique Kalkesi, who is the general manager of Rashosco. And she's kind of the visionary and the women behind who's driving the whole process from the producer side. And hand in hand, she is with Theopista. Theopista is the head of the IWCA, the International Women for Coffee Association in Uganda. And what they're holding is their product, Angelique's Finest Strong Woman Strong Coffee, a coffee which is produced in Rwanda and since last year also in Uganda. It was a blend of Arabica from Rwanda and Robusta from Uganda. And what you can see, it's a coffee package, but the specific of it that it has everything what actually Joseph mentioned. Like it has brand identity, it has trademark registration, it has a production chain. So it's a full product of very high quality coffee, but with the brand package and the whole marketing package attached to it. I just wanted quickly, I was like, when I talk about this, I always put this graph at the beginning because it just shows why you have to rethink coffee and why the coffee system is not working and is actually not serving small scale producers as many of you are. And this is not up-to-date numbers and they have changed quite a bit now with very high market prices, but the general concept hasn't changed. And that is that coffee is a multi-billion market worldwide. And it's growing like crazy, and the revenues are growing, but the profits are made on the consumer side, and so the fundamentals of the trade system has never changed since colonial times, and which means that the profits are made at the end where you sell and market the coffee and where the coffee is drunk, and not where it actually is produced. And only if you kind of work on this principle, there's a way of systematically changing it, because otherwise you're always operating in an unfair market and trying to increase your piece of the cake in an unfair market. And we think the main solution should be to increase the size of the cake, not your piece of the cake. So what we've done is Rashosco has created women associations within the cooperatives, and the women are producing the coffee separately from the rest of the cooperative. And when we heard about this, we said, like, well, this is just a very unique story. This is something which has never been done in coffee, and it has a huge impact. So how can we support the women producers within the cooperatives to grow sustainably and to really benefit from their work? And that was, okay, well, we have to make a brand out of the story. And so that's why we jointly created Angelique's Finest Strong Women Strong Coffee as a coffee brand. Angelique Kalkesi kind of gave her name because she's kind of a visionary behind it. We created a brand guidebook, like with a whole brand identity around it, and thus created a product which is not only good coffee, but which has a story behind it and which has a brand identity. And this is just a quick overview how it's actually done. So the whole production until roasting and packaging is all done under the authority of Rashosco, the Rwandan company. And then once the coffee is in its package, we buy the coffee and we distribute it in Germany. This is a picture where Angelique is talking. On the left, you see Angelique, the head of Rashosco, and on the right is Eugenie, the head of cupping and quality control. And in the middle is Miss Meyer. She's the head of a medium-sized roastery here in Germany. Medium-sized means they have 6 250 kilogram roasters in their factory. That is medium-sized in Germany, because you also have roasteries which have like 10,000 kilogram roasteries. And there they discussing their partnership where Angelique is outsourcing the roasting to a German facility, so that their coffee is always there on demand, and still they have the control over the product. So by saying that it's important to digest, because it's an example to show that value creation has a lot to do not with the physical value creation, like where's the roastery, who's roasting, but with control and power and ownership over your product. So for Angelique, roasting is just a service, and who's doing it is just a question of who's doing it the cheapest and who's doing it according to market demands. And that's why the decision was made that the roasting is done at a German facility, but just as a service. So the unique selling points of Angelique's Finest is first, coffee made by women. So it's only women produce coffee. Women are in the key positions along the world value chain, and it is the brand of the producers. So that's how we market it in Germany. It's a brand representing the producers. There's a premium paid to the women for the coffee, and with the story, we created strong partnerships with media outlets in Germany and like women rights organizations, and the basis behind it that it is also that it's a they're very good coffee. So the best story and the best marketing idea and brand identity doesn't help you if the coffee doesn't taste good and tastes good consistently, and you have the coffee available nonstop, because worst thing is you find a really good big customer who gives you a good price, and then like after half a year you're running out of coffee, and they say like, well, I really liked your coffee, I liked your story, but if you can't supply, I just have to go back to the big players. And then transparency and authenticity with customers really has been a key factor for us to be successful, because you kind of grow your own community, and that goes through market and producer side. So Angelique's side of like communicating the whole story to the cooperatives and the members really helped us to go through difficult times where cooperatives were supporting us, and helped us on the consumer side to really build a community which is not only drinking the coffee as customers, but who sees themselves as more than customers, who really sees themselves as part of a story and part of building something up. And so we're doing this now for 8 years, and now we are selling approximately 60 tons of Angelique's Finest every year, and since 4 years we've managed that we've never been sold out, so we always had a stable supply of coffee. We have some very big customers who buy like 800 kilograms of coffee a month for their employees. And all of this is based on like quality control and ownership over the coffee by the producers. So this is a picture of the coffee lab in Rwanda, where producers take control of it. And with this system, it's just possible to increase the margin for producers. So by kind of having the system where producers have full control over the product, the margins on the consumer side are cut, and the margins on the producing side are increased, and also a lot of value creation is done, like design work, like marketing work, like the management of process, etc., where which is all done in Rwanda or Uganda. You have to have a unique selling point, and for us that was really the point of having a very strong women associations who represent the trademark. So this 100% made by women, something we really much focused on. So now let's go back to the topic which is what we mainly wanted to talk about it today, is the finance of the whole value chain. And I gave you an overview of the system first, because everything has to work hand in hand. Like there's no like the financing system I'm presenting to you now only works because we have this brand identity, and the repayment also only works because we have the established ways of trading and how the coffee is transported, etc., etc. So it's difficult, or I don't see how you can think financing separately from your whole product and the business plan. So that's also what I really appreciate from Joseph's presentation, is that like you have to really have a good planning and market insights, research, and partnerships, etc. Before you actually have to look for financing, because financing is only the mean to execute what your ideas. So with our system, we could ensure that there is really high value created through the coffee. Like when we started, the coffee market prices was still very low, so we were able to pay way above world market prices to the final producers, and there was a market for the coffee. But still, the remaining issue was how do cooperatives actually finance themselves to produce the coffee, so that we always have that the value creation and the value chain is actually working and not disrupted. And cooperatives were facing big financing challenges, and this has even increased with increasing coffee prices, because now cooperatives were facing competition by private buyers who have deep pockets, who have the financing, who can buy cherries and kind of be a competition for cooperatives. So the need for pre-finance was more and more becoming important. And the research showed that well, the average interest rates in Rwanda at that time were like 18% interest. And at the time, the interest rate in Germany was actually like 0.5 to 2%. So there was a huge gap in interest rates and financing costs between Germany and Uganda and Rwanda. And we thought, okay, well, why don't we leverage this difference and while still controlling risks? And the solution was that we established what we're calling a revolving fund, where we, as a German company, borrow money from private lenders, and we use this money not for financing our business expenses, but it's exclusively and separately accounted and managed for pre-financing coffee, and the repayment of the money is not in cash but in coffee. So we provide upfront finance for coffee and for expenses, and get repaid by getting coffee at the same value. And that helps that with relatively small amounts of capital, you can actually finance a lot of coffee, because it turns around so quickly. That's why it's called revolving fund. So you give pre-finance and you get coffee, and then you have pre-finance again, and that can turn as faster we sell the coffee, the faster this revolving fund can turn. And how did we do it? Like, how did we get the money? So you can see here on the right, it's at the moment it's about 300,000 euro, which we have in the revolving fund. And how did we get the money? And that was really through our partnership. So we have on our website for a long time, we always had a form where customers could put in, like, are you interested in investing into Anjix Finance, into the value chain? And we were kind of collecting addresses over the years. And when the time really came where we saw, like, well, we really have a pre-financing need, we activated this database, and we made Zoom calls like we did now, where presentations, where Angelique was there, where representatives of the women associations were online, and interested investors. And our role was really the bridge builders and more or less the translation on a language basis, but also on a cultural basis, where we kind of explained the system and we're facilitating between the people who were interested to investing and the cooperatives and the producers who were interested in pre-finance. And that worked out to be really successful. So we could have actually received way more money that we needed or that we were willing to risk, because it is of course very risky, and we are using private persons' money to pre-finance coffee, and and now we're doing this for, I think, 4 years already, and for now it has been very successful, because it takes away a lot of these accounting issues. Like we don't have we don't have working in a banking system, etc. Because it's basically very simply pre-financing, like buying coffee very early, or paying expenses on behalf of Maszowsko, and in return getting coffee. And the accounting is done in a very simple spreadsheet where we list the pre-finance is done, and we list the coffee value bought in return. And yeah, I want to focus on the right side here. It says Geschlechterverteilung, which means in English gender distribution, and it shows we have received way more money from women than from men, and it shows that like the story behind and the concept behind and the people behind really are the convincing part of it. So by having Angelique and the producers presenting what they're doing and pitching the need, yeah, people in Germany here were interested to provide the upfront finance, and it was small amounts. So like it's you could the minimum input we had was 5,000 euro, and it was distributed amongst a lot of people. And so at the moment, like every euro invested is providing 2.5 euros of pre-financing a year. And what we did is we really focused on private lenders in Germany, not on banks or institutions, because it just gives us a lot of flexibility and it makes things much easier. And it's also more about really tapping into the like there was mainly people who would otherwise donate a lot of money, and they would say like, well, actually, I like it much more that instead of donating, I invest in, because then I get the money back and can use it again. Yeah. And so at the moment, the interest rate, so it's not for free. People who are investing still want to have an interest, of course, and the interest has to be paid by Roscoe. And but the average interest rate in the revolving fund is 2.2% at the moment, whereas like the best agricultural loan Roscoe could access in Rwanda at the moment is 13%. We have went to a system where we do in order to share the risk, is that for every pre-finance we do for green, like really like early upfront pre-financing for securing the green for Antiques Finest, Roscoe is providing 10% co-finance with the 13% interest in order to have a risk distribution between us as a consumer and the producer side. And yeah, that's kind of how we tackled the investment, the pre-financing need, and yeah, it's for us it was successful, but as I said at the beginning, this only works if you embed it into a bigger business plan. So here's a picture of like our social media presence where an influencer made a post about the coffee, and on the left side you see the producers who also provide marketing content and yeah, who market their brand, because that has to go hand in hand. And yeah, like a small idea can go big way. So we've received the biggest prize in Germany, which is therefore like sustainable products. And I was on stage there, like giving the honor to the producers in Rwanda, and yeah, I think just it shows that thinking out of the box can also give you solutions, and it's always good to find partnerships and do it gradually. Like the revolving fund started relatively small, and we grew it with the demand. Thank you very much, and looking forward to your questions.
Okay, thank you so much, Mr. Zava, for that presentation. Thank you so much, Mr. Joseph, about that presentation. So let me call upon my moderator. Yes, Julius, you have a question already?
Yes,
Okay.
I would like to thank the guest speakers.
Yes.
Oh, okay. So my question was actually it was going to Joseph, and my question was, as an organization, as UWEAL, do you work with the youth? Because I've noticed that you work with women in women-led businesses, but I was looking at also men inclusive with a focus on your core programs.
Yes, I appreciate the presentation from Xavier. One of the things I've seen from the cooperatives and the value chain is maybe the focus on the farmer and the buyer, and we forget other players in the value chain. And I'm wondering why even the cost of borrowing sometimes becomes high. We know there are money diversions, and people, when they get money pre-financing, they are okay to sell the future proceeds of their coffee plantations with uncertainty of what the yield will be, as long as they get money today. And it is coming from the fact that money today is better than maybe money tomorrow. Looking at the multiplier factor, you could invest this money today and get even more money. And I wanted to request, if possible, in the pre-financing, can we have, if one, to control the private sector price inflations, because for them they have bad approaches to maximize and recover their money. We have a pre-agreement with these farmers to buy off their coffee, so that they have that certainty that money will come. And maybe we can suggest on the future prices at the time of harvest to give them a point of comfort, but also is the possibility of bringing other players in the value chain. If coffee needs fertilizers, do we have fertilizer providers? And here it helps that does not involve the direct liquid cash flow, but it's a network of agreement. I have a coffee garden, there's a supply of fertilizers that we need, and there is a company in Germany that buys my coffee. Now, the relationship between us three means I'm able to get the fertilizers without crying for not having money. And then the supply of the fertilizers is sure that the buyer in Germany will be able to pay. And the buyer in Germany is sure that we'll be able to get good yield from the coffee farmer. And when you look at the relationship between us three, the exchange of money actually is minimal at the start, but it is more at that time when we have harvested. It means it reduces the cost of borrowing prior to harvesting, and it just allows the other person who has the inputs with financial muscle to let the inputs be used by the farmers, but the confidence is coming from the buyer. And when you go to the financial institutions, I think a bank in Uganda would be willing to give a farmer if they are sure that the yield of the farmer will have assurance to be bought by a company. And this company gives the letter of comfort to the bank. Give that person money to do ABCD. When he supplies, we shall pay as per these terms. All those opportunities are there. Maybe we just don't know how to utilize them. But in most cases, most of these associations focus on the producer of the product and the buyer, and we forget other players in the queue, which has made still the issue of accessing to finance still hard. The cost of borrowing still high, because whether you're buying my coffee and you give me pre-financing, the prices are going to be inflated at the fertilizers point. The person selling the fertilizers will do inflate, and then we are still allowing the private players to compete with us, whether they are having bad approaches, because for them, they are not exporters. They don't mind what happens. They're after selling and recovering their money and maybe accumulating profit. So how do we ensure we have coffee sector sustainable with quality we have to allow all the players in the value chain, including the providers of the input, the farmers, and the buyers who actually transform the products into consumable product. All of them work collectively and limit the exchange of money, but instead enable access to the resources we need at every stage. Then the financial institutions will come running because they need all the players in this see by the bank that they need to assess the credit worthiness is for all of these three people, and it becomes easier. Going to the question of which was asked on UWEAL. UWEAL is a women-based association which deals with women-led enterprises, but also has a youth component. Obviously, the progressive growth of UWEAL, the members get aged, and we also groom the youth, the young entrepreneurs, to potentially take over the will with its core mandate of empowering women entrepreneurs. So yes, we have the youth will, and two, we believe that women-led enterprises are not fully owned by women, but we are saying either majority of stake must be by women or fully 100% women, or it could be women-led enterprise where majority of the employees are women. So ours is to grow enterprises sustainably, giving a voice to women to see that they can also exercise their skills and expertise. And we see at the end of the day, the economy growing. So that is what I can respond to my colleague. Thank you, Mercy. Back to you.
Any more questions? Maybe let me get some questions from but I think they already answered from previous presentations. These were from Judith. What are the main barriers youths in coffee face in accessing credit funding? Accessing credit. What are the main barriers they face in accessing credit?
The core barriers, high risk exposure due to agricultural uncertainties that we have, especially in Uganda, which deter many of the financial people, financial institutions give their money, all are willing to give their money at a high risk. It has become a barrier that people are not willing to put out of their money in agriculture. But also the conditions, the pre-financing conditions, like the collateral. When it comes to the youth from school, very, very, very few people have collateral you can give to banks, the financial institutions, to give you money to build your idea or to grow your investment. So that one also becomes a barrier. But also the high borrowing cost. Xavier was trying to show you the interest rates in Rwanda and in Uganda, and you would see the huge variance. Imagine you have 1,000 and you're supposed to pay more than 10% of it. And actually that is for normal borrowing in big financial institutions. People are borrowing for 10% per month because they're fighting to make their businesses stand, but the cost of borrowing is too high. So many of the people become ineligible to accessing such finance, and it doesn't even sound sustainable. So it has also become a financing barrier. And maybe lastly is the knowledge level of the potential borrowers. Do we have clear books of accounts? Do we have clear business plans at the time of borrowing? No. Someone walks into the bank and says, I need a loan. For what? To go and put in my garden. How big is your garden? Can you give your production performance for the last 3 months? I tell you less than 10% will give. Do you have a record of how you've tracked your expenses versus income? Many don't see it as crucial. In most cases, the banks look at you and say, this one is not credit worth. We cannot risk giving our money because there's no clear forecast. And others buy. You come to a person who is an expert and you tell him to do for you something, and when they try to explain, you can't even explain the business plan you have because you gave someone money to do it and does not reflect your business. So you're borrowing for a business, but using a document that speaks of something very different. If someone tries to do the creditor's worthiness assessment, you are not eligible. So that's some of the quick highlights on barriers to accessing financing.
Okay, thank you so much, Mr. Joseph. Then we have here a question in the chat goes to Mr. Zava. Did you also face challenges with your cooperatives due to poor governance structure? We had it often now. That is the problem.
Yes, there were a lot of issues with cooperative structures, like starting from cooperative management not using the premiums for women associations in a different way to like Angelique is now searching for a new supplier of Robusta in Uganda because the cooperative we bought from last year didn't manage to get Fairtrade certified, which was a clear requirement to become part of the Angelique's finest system. So yes, there's a lot of issues with corporate governance, but it's always like it goes hand in hand. Like we also didn't buy as much upfront as we promised at the beginning. So there was also not the means to do the fair trade cooperatives. So yeah, it's an issue, but it needs to be tackled in a joint effort. And what we do and a big asset we as a Coffee Cooperative have is that Alan in Uganda is providing a lot of support to cooperatives and always with like he's not doing it for free and he's not doing it for non-business related stuff for us. So but like he's helping a lot for making sure export processes work well and for solving issues when they arise. So yeah, I think that is also a key factor why the system is so smooth, that he's there permanently and helping cooperatives and producers solving issues. I just saw the second question. The question, is it still attractive for investors at the moment with higher rates in the moment? Yes and no. It's not as easy as it was at the beginning when the interest rates in Germany were basically zero for private people. There we could kind of, I always said, like it's easier to get money than to sell coffee. That has changed, but also our success story has grown. So it's also we have a wider network and we can show that we take care of the revolving fund for several years now. So there is still the potential of attracting investors and getting more money. Yeah. I see another question. Do we plan to scale operations to other areas in Uganda? Well, that all is driven by market demand. Like we only use Robusta from Uganda, and we were hoping that some very big clients would switch from the 100% Arabica to the blend, which they didn't, and that's why the demand for the blend and thus the Robusta is lower than we expected. And we can expand as soon as the market demand has picked up again.
Right. Thank you so much. So there is a video here from, sorry, a message, a question to Joseph. It says, please talk about the available women opportunities to access financial support in Uganda.
Yes, thank you, Mercy. There are a number of opportunities in enterprising that are there, right from the financial institutions to funded projects. Right now, UWEAL is undertaking a Grow project, which I believe you've heard about, where they are focusing at women-led enterprises, bridging the knowledge gap through capacity building, but also enhancing their financing through the pre-agreed work mechanisms under the financial institutions that were contracted by the Ministry of Gender through PSFU. And one of the things they had seen was the barrier to financing included collateral, but also the high interest rate. So women have an opportunity to borrow at as low as 10% per year and grow. But also there are financial institutions that, for example, UWEAL has MOUs with. Stanbic Bank has a product called Women She4U. It gives women entrepreneurs access to financing for as low as 10%. And different financial institutions now have established women-led officers in charge of women-led enterprises with an intention of growing, giving an opportunity for women in enterprising to have their enterprises grow. So UWEAL, for example, has MOUs with 14 financial institutions that have different packages. For the different clusters we have 14 clusters that define the categories of women in various businesses, including agriculture. So women, one of the things you have to agree that when you want a loan, you need to make some survey, which products the bank has, what are the interest rates, and you also do a comparative. People want to go into the bank, walk in and say, I want a loan. Which loan do you want? You even don't know the kind of loan you want. You even don't know the interest rate they offer. And the person of the bank will give you the loan product that will give them more return in terms of interest, because remember, it is also supposed to be profitable, making revenue. And for as long as you have collateral, they will be willing to give you the product that will give the bank more revenue. Through collaborations in associations and cooperatives, for example, UWEAL and the other associations, you have at least a blended level of effort in terms of knowledge you share with other members who have either borrowed before or who have knowledge of what financial institutions offer, and then you will make the best financial decision. So women have a lot of products that are looking out for them, but very few have utilized them because of knowledge gap, maybe because of poor book management, but also collateral, which they have tried now to soften about collateral, to allowing a man, your husband, to give you permission to use his property to borrow. They have allowed that to ensure that women have access. We have so many products in financial institutions. And you've seen also from Xavier's presentation, there's more focus on women. As long as women are intentional, willing. That's what I can give.
All right. Thank you so much. We shall give it a try. For the winner, there. Okay. My co-moderator, Joel, are you here? Okay, I think we should close the session. Thank you so much, our guests, Mr. Zara and Mr. Joseph. It was a wonderful presentation, and we have really learned from it. Yeah. We hopefully to meet Mr. Zara. I don't know if we shall, but I think we shall. Thank you so much all for attending. Yeah. God bless you. Bye.